Hello and welcome on my YouTube channel. Great that you decided to watch this presentation, which is about the growth of asset classes. So where to invest, that's a question, and maybe we find an answer for that afterwards. What will be the content? Yeah, first of all, we have to talk about growth and its characteristics. Then we are talking about the German stock index. These are the so-called 40 blue chips here in Germany. We look at the Standard & Poor's 500 index, the 500 companies in the US with the biggest company in terms of market capitalization. Then we are looking to the Nasdaq 100, this stock exchange in New York. And the Nasdaq 100 comprises the companies which are not in the financial market. And usually this means companies in the technology information business here. Then we are looking at gold, and we are looking also at cryptocurrencies, in this case Bitcoin. And last but not least, the summary. But before I start really into the content, this is of course no investment recommendation or trading recommendation. It shall give you an overview of the development, of the growth development from the past. Let's go to the growth characteristics. What can be said is that growth is usually exponential and not linear. Therefore, linear scaling in the graphics is usually not very useful. You will not see much things there. But a log scaling, a logarithmic scaling, would show a straight line if the growth is the same each period. And I will show this in a graphic here. So what you can see here is a plot which has been created by this application Simo, which is available for the iOS Apple system. And what I assumed here is that this asset has a value of $1 at the beginning and has then a development with 8% growth per annum. So the X factor for 1 year would be 1.08, so 1 plus 800ths. And you see here the linear graph here. And what you would see after 36 years is the multiplication 1.08 36 times. And this is nothing else than 1.08 to the power of 36. And here in the blue line, you see if you take a logarithmic to the base 2, and you see here a straight line. So it doesn't matter if you take the logarithmic function here in this graph, or if you would scale this vertical axis in a logarithmic fashion here. That's the characteristics of growth. And let's go to the German stock index. 36 years from 1985 to 2021. And what we see here is a graph from the website tradingview.com. So you see here the timeline from 1985 to 2021. And what I draw here is such a straight line, which is approximately the growth. And this line shows 7.7% annual growth. And that's quite easy to calculate because you have here at the beginning of the 36 years a value of 934, and at the end a value of 13,765. So then you have to get a calculator, and you calculate first the 13,675 divided by the value at the beginning, 934. And then you have the x factor of 36 years. This is 14.7. And if you want to have the x factor for 1 year instead of for 36 years, you have to do the opposite as in the slide before. You are taking this value and you have to take the power not of 36, you have to take 1 over 36. And then you will get the x factor in average for 1 year, 1.077, and this is 7.7%. Yeah. Let's go to a different time window here for the German stock index. Now 15 years from 2006 to 2021. And what we see here in this graphic is, it's not so easy to draw this straight line anymore, but I think you can do this, especially here in the later part. And this red line shows only an annual growth of 6%. So in the past, for 36 years, we had 7.7%. Now we have 6%. So this means the German stock index seems to shrink a little bit concerning the growth. Let's go to other assets here. Now to a Standard & Poor's 500, also the very high time range here, 36 years. Here you can better draw this line here. Okay, you have here an overvaluation, that's clear. And but the red line shows about 8% annual growth here. So very similar to the German stock index. And what is also interesting here, if you have such a bubble, then usually these bubble increases lasts for about five to 6 years. But then let's look to the Nasdaq 100, also 36 years, same time range, 1985 to 2021. And here we see a different picture. So if I draw here this red straight line, then we have about 13% growth per year. So this is a completely different class, right? So for the other stuff, we saw about 8%, and now we see 13%. Sure, we have this big bubble here. This is the so-called .com bubble, which reached here at the end 2001. But apart from this bubble, this is a quite good fit to our red line here. So this is 36 years. And if we go to 10 years, from 2009 to 2019, then we see with the red line even 17% growth per year. And also here in this time range, the straight line fits very well. And again, a different class of growth here compared to the other assets. What about gold? Here we look 14 years from 2007 to 2021. And here, it's not so easy to draw this straight line, but I think still you can do this here. What can we say here? We have here also a big overvaluation. Again, this is here about 5 years, what we have here for this overvaluation. And yeah, the blue line shows here 8% annual growth. Yeah, that's a similar range as we had it for the German stock index or the S&P 500. So that's not a big difference here. Yeah, and then I looked to the cryptocurrency Bitcoin, 8 years from 2013 to 2021. Why Bitcoin? Naja, it's the one and only cryptocurrency which has really a history. The other cryptocurrencies are even younger and you don't have the history. What we see here is, this is then also a complete different class of growth, especially here at the beginning of Bitcoin from 2011 to 2013. This is an extreme growth. But if we look to the 8 years here, to this blue line, I'm not drawing here the average in this curve. What I'm doing here is that I'm trying to draw the minimum expected Bitcoin price here. So we are matching here and we are matching here. And we are saying this is here a big overvaluation here also, such that this maybe can represent our minimum expected price here. Yeah, and we see the annual growth is 110% of this blue line, and this means every year a factor of 2. But here for Bitcoin we will have also an additional presentation where I'm going a little bit more in detail how this Bitcoin price can be seen. Yeah, what can be summarized? First of all, a log scale should be taken into account if we want to judge a development of an asset here. I think that's important. In a linear scale, you don't see anything. And a development of at least 10 years should be taken into account if you see how long bubbles last. Yeah, they last usually 4, 5, 6 years, maybe even more. So 10 years should be at least taken into account. And if you have a large time horizon here, then with a linear trend line in this logarithmic scale, you can see a massive overvaluation or also undervaluations, which can be identified here. Now we saw this in the graphs. And last but not least, we can say tech outperforms traditional market, because if we look to the Nasdaq, if we look to cryptocurrencies, they have a complete different growth than the traditional market as it is represented by the German stock index or by the Standard & Poor's 500. Okay, that's it for this session. Thanks for listening, and I hope we see us again in one of the next videos. Thank you and bye-bye.